If you master one chart pattern, you will be a profitable trader. Your life will be set. And today we are going to discuss chart patterns. So stay tuned and watch this video till end. So chart patterns are roughly defined in two types. One is continuation patterns and others are reversal patterns. Here we are not discussing about the candlestick patterns. Those for 1, 2 or 3 candlestick patterns we already discussed, and that link is provided in description of this video. You can watch that. Here we are discussing chart patterns, the patterns which are formed on chart, and those are of two types as I mentioned. One is continuation patterns and other one is reversal patterns. In this video I will briefly touch upon each of the pattern in both these categories, but I'll create the detailed videos about each of this strategy, because each of this strategy need to be discussed in detail so that you can trade it and you can earn profit out of it. So this video is brief and detailed video about what is the pattern and what is the logic behind formation of this pattern, what is context behind this, what other things other than the pattern, outside the pattern, you need to see to trade that pattern successfully, how to trade a particular pattern successfully, or how not to trade a pattern, or what are the mistakes people do while trading the patterns and how to avoid those mistakes. All these points we'll discuss for each of this pattern in the individual videos for the chart patterns, for each of the chart patterns. But in this video I'll just brief you about what all chart patterns fall under these two categories. So I'll quickly take you to the screen and briefly give you details about what all chart patterns are there. So you are seeing my screen. I already written something in there to save the time. So let's start. Here, see, as I go on, there are two categories. One is continuation patterns and other is reversal patterns. These are continuation patterns, and first and the most important continuation pattern is triangles. There are three subcategories in triangle pattern. One is ascending triangle pattern, where you can see the resistance line is horizontal and the support line is a trend line sloping vertical. So the slope is vertical, so this is called ascending triangle. The second one is descending triangle, where you can see that support line is horizontal and resistance line is a trend line resistance trend line, and its slope is downward, so it is called descending triangle. The last one is symmetric triangle, where both these lines are sloping. The resistance line is sloping downward and the support line is sloping upward. This is called a symmetric triangle. Second pattern is wedges. Wedges are similar to triangle, but there is one small difference. Wedges also form triangle, but it will be like a very the edges, both these edges will take some time to meet. Okay, these will meet far here, but currently it is just it's both the lines are inward sloping, and if you see both lines have directional slope. Both these are in one direction. Again, wedges are of two types. This is called rising wedge, and this one is called falling wedge. Okay, this is called falling wedge. The next pattern is channels. Now in triangles, it was like you are clearly you can clearly see a triangle forming like this, right? This is also called pennant. In wedges, you can see that, well, it is both these edges are coming closer, but slope is on one side. But in channels, both these will move parallel. Both support and resistance lines will move parallel to each other. See, both these lines are moving parallel to each other. Again, it has two types. One is this rising channel, or one is this falling channel. Okay, or you can directly say that this is a bullish channel or this is a bearish channel. But both of these resistance and support lines go parallel in channels. And last pattern is triangle pattern. The last one is rectangle pattern. In this, it forms structure something like this, and price will keep moving inside this channel, which is of a shape of rectangle. These are continuation patterns. Details of each patterns, how to trade it, what to avoid, what not to avoid, what is context, and everything in detailed videos. The links are in description. Now the second type of patterns are reversal patterns. So when the market is trending, when trending is going on up or down, we want to find when trend reverses, and these patterns are helpful in that. So if trend is going up, then in most cases you will see that head and shoulders pattern forms. Why this is called head and shoulders? Because it looks like there is head here and these are two shoulders. So like a human body, where you can see a head and two shoulders. That's why this is called head and shoulders pattern. If this pattern forms at the top, then this is probable reversal, where uptrend is going on, and if this pattern forms at the top, then this is probable reversal. Next pattern is inverted head and shoulders, which is like reverse of head and shoulder. This generally forms at the bottom, and when this pattern forms and price moves above this is called breakout, and this is reversal. So these lines are called necklines for this pattern. This line, these are key levels. These are called neckline. Then we have important reversal pattern, which is called double bottom or double top. Double bottom pattern forms at the bottom of the trend, or when downtrend is coming to an end, then this pattern is formed. This many times referred as W pattern also. Okay, and in this, price comes down and try to go up, again come down and take the support at previous level and start moving higher. When it breaks the previous high, this can be traded. So this is double bottom. Similarly, if uptrend is going on and this at the top, if this pattern forms, this is called double top pattern, because see, twice it went up and then it came down, so it is called double top. And when this happens, this is probable reversal. Like this, there is one more pattern which is called triple top or triple bottom. Here you can see two tops. In triple top, you will see three tops and then reversal. Or if the similar pattern, if it forms at bottom or at the end of the downtrend, it is called triple bottom. So it is like W, but there is one more bottom, and then price reverses and go up. So these are reversal patterns, and each of this pattern we are going to see in detail how to trade it, how not to trade it, what is logic behind formation of each pattern, what is context, and what all things you have to see outside these patterns. You cannot just see the patterns and trade. You have to see something outside this pattern, and in that context you have to trade this pattern. How to use multi time frame analysis to trade these patterns, what are the best entry techniques, what are the best exit techniques, all these we are going to see for each of these patterns in the detailed videos, and the links for these are given in the description. So please do like this video and subscribe to our channel. Subscribe now so that you get notification when I upload new videos, and you will be able to learn the things. So thank you very much and goodbye.